Live from Tokyo, this is Insight with me, Sherian, where we dive deeper into the stories that matter with crucial context and analysis. The dollar declining along with U.S. futures as investors assess President Trump's threats to remove Fed Chair Powell. Trade talks also in focus, with China promising countermeasures to any deals harming its interests. We'll discuss market strategy with Robeco's Asia fixed income head Chow, who expects tariff negotiations to be messier and more complicated than Trump hopes. Also ahead, the trade war hangs over Vice President Vance's trip to India, starting today with the Modi government hopeful for a quick deal to avoid higher levies. We'll get insights on India's trading position and the stock market's emergence as a relative tariff haven with Anand Rathi Wealth Mutual Funds head Shweta Rajani. President Trump's long-running dispute with Fed Chair Powell has reached fever pitch, with Trump openly musing about dismissing Powell for not cutting interest rates fast enough. The president's top economist, Kevin Hassett, says they're studying whether or not they can fire Powell before his term ends in May 2026. That's after suggesting that the Fed had acted politically to benefit Democrats. Meanwhile, Chicago Fed President Austin Goolsbee is warning against efforts to curtail the central bank's independence.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Speculation about the credibility of U.S. assets really hitting treasuries and also the dollar very strongly. We are seeing the Bloomberg Dollar Index at the lowest level since December of 2023. And this is just extending those 3 weeks of losses that we've already seen. On the other side of the trade, we're seeing trading partner currencies actually gaining ground. The Japanese yen now at the strongest level since September of last year versus the greenback after 3 weeks of gains already. So we're seeing the downside on Japanese stocks. The Nikkei and the Topics losing more than 1%. We're seeing also the Kospi really unchanged at the moment, as we're seeing the Korean won also gain ground against the greenback. But remember, we are seeing some thin trading today because Australia, Hong Kong, New Zealand are away on Easter holidays. But you're seeing mainland Chinese stocks seeing a little bit of upside in today's session as we keep a close eye on the offshore yuan as well. It's been trading within a tight range, but we're seeing that upside today against the dollar. For more, let's bring in Bloomberg N-Line strategist Mary Nicola. Mary, good to have you with us at a time when we continue to see this downside pressure on the greenback. And if you watch risk reversals, as this chart on the Bloomberg actually shows, we're seeing markets the most bearish in about 5 years. Will this downtrend continue?
As long as you get lots of rhetoric that threatens the Fed's independence and talk about trade, you're likely to see more pressure on the dollar. What is happening right now is that investors are losing confidence in U.S. assets, and we're seeing that with treasuries not being a haven flow, neither are the U.S. dollar. So a lot of the disruption is coming from the United States. And so if that disruption and that policy uncertainty is there, then investors are looking for opportunities elsewhere. But where are they finding it? They are looking at the Japanese yen, the euro. They're the two main that are benefiting, as well as the Swiss franc. So as long as those threats remain and they linger, that is likely to be the trend going forward. And of course, we have earnings seasons coming up, but a lot of the trade talks is just going to overshadow any positivity that comes out.
Yeah, we're expecting the Japanese finance minister to meet with Scott Bessent this week as well. They have said that the currency hasn't been discussed, at least in trade negotiations last week. But with the Japanese yen now, the forecasts have been that it could actually get stronger because of these negotiations, even to the 130s level.
Yeah, there's a lot of speculation right now going in terms of, is the Japanese yen really on the table? And of course, if it is, that becomes an even bigger issue. And of course, it puts much more pressure on yen appreciation. So even irrespective of what's happening in terms of, for example, that the lots of price bets in terms of where the BOJ is going have been completely erased, but that's not going to take control. What really is going to take control is what happens with the trade negotiations. And if the yen, if there's any speculation that that is on the table, you're going to see further appreciation of the yen. And so I think what happens is that the BOJ is just put into a more difficult position in terms of how do they continue in terms of tightening. But in fact, they don't really need to, because the currency is doing a lot of the work for them.
Could some of the alternative assets that investors look at be some Chinese shares? I mean, we have seen more spending coming from Beijing at a time when they didn't necessarily move on the loan prime rates today. What are you expecting?
Yeah, I think the key, especially for Chinese equities, given the punitive tariffs that are on China, I think investors are expecting a lot more stimulus. So we did see a strong surge in fiscal spending in Q1, but there needs to be more in terms of on the fiscal policy side, and of course on the monetary policy side, because of course you want to see that the economy, which was in a lull before, now has even more challenges that it has to go through. So before we were dealing with, and we still are dealing with deflation, we're dealing with weak consumption, and then add this on top of it, that just exacerbates the weakness. So we've heard lots of positive messages, but it's really all about the implementation of these measures that come through. So we've heard a lot about the talk in terms of an RRR cut and more policy rate cuts, but it really will be about execution in terms of fiscal and monetary policy that really drives Chinese stocks. And I think that's going to be the key measure in terms of how we see Chinese stocks unfold, how we see sentiment unfold towards China in the coming weeks.
Our MLive strategist, Mary Nicola, there with some of those trades that are in focus these days, especially as we continue to see the uncertainty over President Trump's tariff war. At the same time, we continue to watch treasuries. We continue to see the long-dated yields gaining ground, the steepening of the curve ongoing. Our next guest says the uncertainty introduced by the U.S. administration has undermined the status of treasuries and the dollar. Let's bring in Chow, head of fixed income Asia at Robeco. Tuha, great to have you with us. I mean, this whole narrative of the yield curve steepening in the U.S., the really confidence lacking when it comes to U.S. assets, has something fundamentally changed in the dynamics of the treasury markets now?
Yes, and I think the kind of the rhetoric around Powell's appointment or maybe the removal of him is actually again adding to this kind of institutional independence that I think that had actually been long been something that we actually look to the US for. And I think that and these kind of rhetoric continues to actually make investors increase the uncertainty, increase the risk premium globally, but actually also the relative risk premium between the US and the rest of the world is also changing at a rapid speed.
Do you expect to see continued steeper yield curves? Because on the other side, if we do actually see the speculation about Fed Chair Powell being replaced, the potential could be an outright flight to treasuries, in fact. Could we see the reversal of this trend happening?
I think at the long end, it's a bit harder because I think the risk premium will probably continue to increase if we're concerned about the Fed's independence. However, it could actually introduce very, much more near-term kind of economic downturn for the US, and therefore that could actually mean that near term they may have to cut, but actually the long end is going to be something that the risk premium may continue to increase now unless the Fed is able to try to control the long end by reintroducing quantitative easing again or yield curve control at the long end.
We heard from Secretary Scott Bessent trying to calm investors, talking about the U.S. Treasury having a big toolkit if the bond market sees further signs of instability. What could these be, and what are your expectations for the gyrations that we've seen in this market?
Yeah, I think there definitely could be some policies to kind of allow U.S. banks to hold more treasuries. There could definitely say introduction of to ask the Fed to control the long end yield curves. But I think structurally that could probably basically move, foreign investors away from the U.S. and actually that to be forced into the hands of more U.S. domestics holding more treasuries than they had been. That shift changing over the long run.
In the meantime, we have seen this threat to perhaps what we've been calling U.S. exceptionalism actually give rise to emerging market local bonds rallying. We saw the best start to 2025 since 2022. So especially when it comes to dollar rivals. Are you expecting this trend to continue? Thai bonds have rallied in the last few weeks as well.
I think so. I think given that some of these economies have more room, given that the more deflationary pressures that are happening to cut, and now with the economic kind of uncertainty allowing them to cut, so that there's and with the dollar no longer being that constraining kind of strong, the US dollar does allow some of these economies to actually have policies that actually more, especially if their economies are much more domestic focused, to be able to maneuver themselves a little bit better. Again, as I said, the relativity riskiness of these local markets versus the US has actually now be shrinking, with the US kind of increasing its risk premium relative to these countries.
And of course, at a time when we continue to see perhaps Asian central banks a little bit on the wait-and-see mode, are we expecting the easing to turn into an easing bias very soon? We have Indonesia, for example, this week expected to hold.
Indonesia is kind of a bit exceptional because it has some domestic issues in itself in terms of causing some risk premium to be added there. But I think for the rest of Asia, there is definitely much more easing bias because they have to defend the currency less. I think once the dust settles from all of these, we do think that actually over the long run that, diversification is going to be key. And therefore, investors will have a wider ranging of bonds and currencies that they would actually need to hold. And I think that one of the beneficiaries could be kind of emerging market and Asian currencies and bond markets that had been less in attention relative to the US.
What could those be across Asia?
I think India could be very interesting. I think we also think that the Philippines, which is very much domestic focus, could also be seen as interest. And other countries which have good surpluses, such as Singapore, could find their savers increasingly deciding to actually, reorientate their investment within the local markets as well.
We have seen actually the rupee outperform. We have seen also the Japanese yen outperform. What are the dynamics here at a time when the BOJ is also expected to continue hiking rates?
Yeah, I think the Japan story is very interesting. I think as you can see in Japan that, over the last kind of nearly 2 years now, they have been trying to improve both their capital markets, both in terms of the equity and the bond market, with the view that actually this would be an attractive market not only for domestic saving pools, but actually for others as well. And this could, mean that actually with the U.S. Diversification away from the U.S., Japanese assets could be beneficiary once we get some sort of stability happening.
Yeah, we have heard from 2 Japanese life insurers already that they plan to buy more domestic notes. Is this a new trend?
I think it's a structural trend that actually has been kind of ongoing for some time, but actually now accelerated by the diversification away from the U.S. I think is to say these obviously an increasing in yield levels within Japan was going to be helpful, and that's why that normalization of policy. But I think even more structurally now is to do with the fact that actually the volatility within the U.S. would also kind of validate savers to actually move closer to home in some of their domestic allocations.
And you mentioned, of course, the attractiveness of perhaps the rupee these days with its outperformance, given, of course, the perception that India might be more insulated from tariff news, from the trade war with the Trump administration. Could their bonds, especially when it comes to investment-grade corporate dollar bonds, look more attractive?
I think so. I think definitely, India is going to benefit from deflationary pressures, given that the commodity and energy prices are declining. So that's going to be very helpful. And again, they're not really the target of a lot of these tariffs, as well as the fact that they could be seen as one of those beneficiaries to that is extremely important to the U.S. administration in terms of its policy to aggression towards China, and India could be seen as one of those countries that it's good for them to kind of link those ties to.
India has been seen as a diversifier also away from China. What are you expecting in terms of some of the opportunities in this market at a time when we haven't necessarily seen any moves when it comes to loan prime rates in today's session? Are we expecting anything else coming from the monetary side of things?
I think there's definitely room for them to cut a bit more, but I think like everybody else, I think given the barrage of kind of news that people are having to digest, I think it validates to kind of wait and see how and when that gets trajectory. But the trajectory is very clear that actually that they can definitely have room to ease monetary conditions. I think it's still relatively restrictive in India at the moment, so that trajectory, but timing wise, I think it's a bit harder because I said the amount of information and headlines that investors and policymaking are having to deal with, that does give them room to kind of think, oh, let's pause and act strategically rather than rushed into actions.
That's the case for the PBOC as well?
Yes, I think the PBOC is already front-loaded. I mean, it's on fiscal-wise. I think it's been very clear, and I think this is the first time we've seen fiscal being quite aggressive. But in terms of monetary, I think for now they say they've left the LPRs on hold. I think they probably would decide to do a triple R cut before they decide to cut the loan rates.
And what would be the implications for the Chinese bond space?
I think that, we definitely see that is an area where, it could still be, quite positive on that side of things. I think the allocation to China bond has actually, not been very aggressive. I think the lower yield rates have been one of the issues relative to elsewhere. But I think as we see clarity in the policy trajectory that China is instituting, I think, there is still definitely more upside to go in Chinese bonds.
Are you seeing any clarity when it comes to the Chinese yuan and how policymakers are planning to use the weakness or strength of the yuan when it comes to trade negotiations?
I think they have an incentive to actually keep it relatively stable. I think it's weakened, more because of the weakness, versus other currencies already. So I think, stability is actually going to be very key. And I don't think that they feel like they will need to use, currency as a policy tool. And actually at this point to maintain stability is probably the best tool that they can actually institute to keep the yuan being a currency that people can have a bit more faith in.
That's been the speculation when it comes to Chinese treasury holdings as well, right? But what's been interesting is now Deutsche Bank saying that Chinese clients have reduced some of the treasury holdings in favor of European debt. Are you seeing already the moves in the private sector?
I think the private sector kind of really moved very early on in the year, and we think that continues. And I think the European stories has been very interesting for investors because again, it was the European story was such a negative story going into the year that the allocations were relatively low. It was a very easy trade for private investors to move that way. But as the European story starts to pan out and as being, an alternative to the US. I think, again, as I said, diversification is key to private investors. And I think they'll be holding a much more diversified portfolio in the long run than they had been, until this point. And I think, all other assets could benefit from, this kind of diversification away from U.S. concentration.
Chow, Head of Fixed Income Asia at Robeco. Good to have you with us as we continue to see the markets really move away from the U.S. dollar in today's session, the yen gaining ground, the offshore yuan gaining ground. And of course, we're seeing other assets also gaining in today's session. A little bit of thin trading given that some markets are still closed, including Australia, Hong Kong, and New Zealand as well. Still ahead, Anand Rathi Wealth joins us with their outlook on Indian markets as New Delhi prepares to welcome J.D. Vance for tariff talks. This is Bloomberg. You're watching Insights. Here are some of the top corporate stories that we're tracking. Boeing has begun returning 737 MAX jets to the U.S. that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after arriving in China last month. Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has reportedly been delayed by at least 3 months. The Reuters report didn't give a reason for the delay. Tesla is due to report earnings Tuesday, with investors looking for guidance on how it intends to turn around its shrinking market share. Elon Musk has revived his long-awaited plans to visit India after speaking with Prime Minister Narendra Modi. The Tesla CEO had been due to visit a year ago, but postponed the trip at the last minute, citing pressing issues at his auto company at the time. Tesla has long wanted to enter India, but disagreements over import duties and local manufacturing commitments have stalled progress. Take a look at how Asian assets are trading right now. We're seeing a little bit of a mixed picture as the Nikkei is falling more than 1.5%. The Taiwanese stock market also under pressure. The Kospi is holding steady. Of course, we're still digesting a lot of news around tariffs and trade. We continue to watch the U.S. dollar now trading at the lowest level since December of 2023. And on the other side of that trade, you have strength for the Japanese yen, strength for the Korean won as well. So you're really seeing the MSCI Asia Pacific not doing much at the moment. There's a push and pull happening across the markets right now. We do have a few markets also still away on Easter holidays, including Australia, Hong Kong, and New Zealand. But take a look right now at what's happening with U.S. futures, because we had seen stocks gain marginally last week, but it's going to be a week heavy on economic data, and it's really going to allow us to sort of parse out what happens when it comes to those tariff effects on the broader economy. We do have PMIs from Japan to Europe to the U.S. that we'll be gauging. And take a look at how U.S. Treasuries are also trading at the moment, because they're pretty mixed. The curve continuing to steepen. The long-dated Treasuries weaker. 2-year contracts still firmer. Of course, we continue to listen to those speculations around the confidence on U.S. assets, including Treasuries and the U.S. dollar as well. Coming up, Japan's Prime Minister thinks trade talks between Tokyo and Washington could be a model for the world. The latest developments on a potential deal next. This is Bloomberg. Welcome back. You're watching Inside. Take a look at how Chinese assets have been trading today because, of course, we're also digesting the loan prime rates that Chinese banks have kept unchanged in the month of April. We're also digesting Chinese policymakers coming out and talking about countermeasures against the U.S. that China firmly opposes any deal harming China's interests, according to the Commerce Ministry. We had already seen China's government spending rising at the fastest rate for any first quarter since 2022. So we have seen Beijing really trying to insulate the Chinese economy. As you can see right there, the CSI 300 gaining 0.2%, continuing a little bit of that strength that we saw last week as well. Although Hong Kong is away on holidays today, closed alongside Australia and New Zealand, the offshore yuan strengthening against the U.S. dollar. Take a look at how Japan is also faring because we have seen that strength on the Japanese yen as well, the highest level since September against the U.S. dollar, continuing to extend those gains after 3 weeks of gains already. The Nikkei under pressure, down more than 1.4% for the Nikkei, and the yen really headed towards that 140 level. We continue to watch really JGBs on the long-dated maturity, and because we have seen those yields shoot up, of course, following treasuries as well. But we've also heard from 2 Japanese life insurers saying that they plan to buy more domestic notes. Of course, all of this in consideration of yields skyrocketing across Japan and really shifting away from foreign debt. All of this as we're watching, of course, the auto sector, the semi-sector, anything that will be really affected by trade negotiations. Those negotiations between Tokyo and Washington set to continue this week. And Prime Minister Shigeru Ishiba now saying that the outcome could be a model for other nations trying to avoid higher levies. For more, let's bring in Bloomberg's John Herskovitz. And John, of course, we have heard a little bit of the results coming from last week's trade negotiations. We have the finance minister and Secretary Bessent actually meeting this week as well. What can we expect to be on the table?
Well, Japan has kind of floated what they want to be on the table. They've talked, in local media, we've seen some talk about autos and agriculture. Japan is looking at doing some non-tariff barriers in terms of inspections, safety requirements, which the U.S. sees as preventing its cars from making it to the Japanese market. There's also been some talk about rice, decreasing tariffs here, and soybeans for purchases of more U.S. agricultural products. That's what Japan wants. What the U.S. wants may be a different matter. So we'll see what happens when they begin talks second round later this week.
It's really funny when we talk about the U.S. wanting their cars in Japanese roads, because if you think about it, those gigantic cars would not fit in these Japanese small roads. But it's not going to be popular among the Japanese public. I mean, especially when it comes to rice. That's a very sensitive topic here domestically. And
exactly. You have the rice farmers are a strong agricultural constituent for the ruling LDP and have been that way for years. It's also part of the culture, and the rice culture is ingrained in this country, and there's a matter of food security. Now, sometimes when Japan's been forced into these sort of things, they've used foreign rice for things like animal feed. And the idea of U.S. rice getting on ships and coming and being sold in Japanese markets may be far off, but there could still be some more purchases of U.S. agricultural products and rice coming into Japan.
Prime Minister Ishiba saying that these negotiations could actually be a model for the rest of the world, and we know that South Korea could be next in the trade talks.
Exactly. And the first major trade talks were between, since the Liberation Day tariffs were
so-called Liberation
Day. Yeah, were between Japan and the U.S. And it's such an important trading relationship. And with South Korea is also an important one. Now, if these talks go well, it bodes well for other countries who are trying to make their deals with the U.S. If these things get hung up, it could also be a model for the world of how things could go wrong. Japan is trying to do this as a way in which everyone wins, realizing there's some things that they could do to make more access to the U.S., and also looking at the U.S., which has been a source of Japanese foreign direct investment for years. Anyone in the U.S. knows about Japanese companies that are there, the automakers there that are turning out pickup trucks in Texas and other parts of the U.S. So, the relationship is there, and Japan is hoping that it's a win for both sides.
The relationship is there both for Japan and South Korea, but I really do not want to be a negotiator on that table because if you think about it, it's so difficult to sort of gauge what the Trump administration wants, right? What President Trump wants. I mean, he's been talking about so many different things that have been an issue for him, whether it's a weak Japanese yen or whether it's really supporting the U.S. military and the protections awarded not only to Japan but also to South Korea.
No, exactly. And it's whether they'll be bunched in. There are a lot of grievances that Trump has. He's called Japan a security freeloader, not exactly what you want to call one of your longest allies. And whether these are part of the trade talks or not is another matter. And Prime Minister Ishiba in Japan wants them separate. I'm sure South Korea does as well. South Korea actually reached an agreement, I think last year, for military funding. Trump wants to reopen it. He wants Japan and South Korea to pay more. And if this is part of the trade talks, it's really going to be a difficult non-starter for Japan and South Korea.
Yeah, it's going to be a very complicated set of negotiations. Great to have you with us, John Herskovitz here at Bloomberg, with those trade negotiations for those two trading partners for Washington. We're also watching Beijing because it's saying it's firmly opposed to any party reaching a trade deal at the expense of Chinese interests. That follows reports that the U.S. is looking to pressure other countries to curb trade with China as part of their reciprocal tariff negotiations. For more, let's bring in our China correspondent, Min Lo. So, Min, we continue to see this very defiant stance coming from Beijing.
Yes, and this is a clear warning shot from China that any other country that tries to cut a deal with the U.S. that in a way that undercuts Chinese interests is going to face some consequences. It didn't spell out what sort of countermeasures it's going to take, but it did say it is going to take steps to fight for its rights and interests. And this comes, as you said, South Korea, Japan, Vietnam, some countries in Southeast Asia are all heading into talks with the U.S. And it comes on the heels of President Xi's trip to Southeast Asia, where he left a consistent message in each of these countries, calling for the countries to jointly oppose U.S. hegemony. And there you can see on the screen this statement from the Ministry of Commerce saying the so-called exemptions at the expense of others' interests is equivalent to seeking the skin of a tiger, which will ultimately fail on both ends and harm others without benefiting oneself. And this is quite interesting because it kind of alludes to the idea that maybe the U.S. is not necessarily a reliable partner, that cooperating with the U.S. doesn't necessarily mean you could get lower tariffs. Just look at what happened with Canada. So China is really positioning itself as this counterparty that is stable, reliable. It's signed dozens of deals with the Southeast Asian countries. And of course, the question next is what these other countries, these U.S. allies are going to do, because we did see the Spanish Prime Minister, for instance, visiting Beijing in defiance of threats from Scott Bessent. We saw the Malaysian Prime Minister piling praises on President Xi as well. So we'll have to see how these other countries try to navigate and not to offend both sides, both the U.S. and China.
I mean, Beijing is really playing it very strategically, right? Beefing up its diplomacy, but also trying to beef up its economy. What government spending in the first quarter rising at the fastest pace in about 3 years.
Yes, it's risen by about 5.6% in the first quarter alone. So the government has been ramping up and accelerating the pace of implementing its budget. But we also heard from Premier Li Qiang on Friday calling on officials to have to think out of the box when it comes to implementing a well-coordinated policy mix. And all eyes are on that April Politburo meeting and what exactly the government is going to do. And we got a hint over the weekend where the Ministry of Commerce pledged to help companies, exporters in particular, to divert sales to the domestic market. And we saw all these big e-commerce platforms that are stepping up to do their part. Alibaba, JD.com, Tencent, for example. JD.com is one company that has said it's putting aside 200 billion yuan at least in the coming year to buy up goods from exporters, to hold on to them and to divert that to the local market in support of these exporters that are going to be hard hit by tariffs. So we'll have to see what sort of other innovative approach the Chinese government has.
Especially at a time when the U.S. continues to apply pressure, right? We are now seeing proposals to impose tariffs on Chinese vessels as well. So what will be the implications of that?
Yeah, so it's very interesting that we are actually seeing Korean shipbuilders today leading the Kospi down. Big drop after Nomura had downgraded the sector. And it's interesting because we saw these Korean stocks gaining at the expense of Chinese shipbuilders on Friday. But now we're seeing a different narrative here. Nomura is saying that even though it's going to be the Chinese shipbuilders that are paying the levies, it doesn't mean that Korean shipbuilders can then impose a premium on their products and services. And it's saying that because the tariffs are going to cause global demand to come down, it's going to affect the global sector, whether it's the South Koreans or Chinese. The Chinese are the largest shipbuilder in the world. The Koreans come second. And of course, importers are saying they're going to have to pass on some of this cost to consumers. It's going to lead to inflation. And this is still the beginning of this because the levies are being proposed by the U.S. It's not fully enforced yet. We haven't heard from China in terms of how they might respond. If China respond with retaliatory tariffs, imposing levies on vessels carrying U.S. goods to China, that could complicate things even further as well.
Bloomberg China correspondent Min Lo there with the latest on those trade tensions between Washington and Beijing. And coming up on the Insight, India now set to host J.D. Vance today as New Delhi seeks relief from President Trump's tariffs. A closer look at what's at stake next. This is Bloomberg. Welcome back. U.S. Vice President J.D. Vance is due to meet with India's Prime Minister today as Narendra Modi seeks to avoid a 26% so-called reciprocal tariff rate. Bloomberg's Shruti Srivastava joins us from New Delhi with the details. Shruti, so what is J.D. Vance hoping to achieve here?
So U.S. Vice President J.D. Vance would be on his first ever official visit to India. And he's on a 4-day visit where he would be meeting Prime Minister Narendra Modi and some of the key ministers and officials in his administration. Now, his visit, of course, comes against the backdrop of the ongoing trade war that the U.S. President Donald Trump has sparked. Now, Trump has slapped so-called reciprocal tariff on some 60 nations, including India, and those tariffs have been paused. So these talks are critical from India's perspective, which is negotiating a bilateral trade deal with the U.S. In a bid to narrow down the trade surplus it enjoys with Washington, and also to dismantle some of the high tariffs which Trump has criticized in the past, some of the high tariffs and non-tariff barriers both. So obviously, top of the agenda of Vance's visit would be trade talks. Officials in the Trump administration have named India as one of those several countries with whom the U.S. is prioritizing trade talks. And the 90-day pause is being viewed by officials in New Delhi as a window of opportunity to secure a quick deal with the U.S. And get some reprieve from the reciprocal tariff. So Vance and Modi would definitely be discussing trade and tariffs. But of course, they would also be discussing about defense ties, regional security cooperation, energy security, and forging deeper ties in technology. During Modi's visit to Washington in February, the two leaders had agreed to forge deeper ties in these segments. So that is, of course, India has agreed to buy more American goods, more oil and gas, more defense equipment from the US. So, of course, that also would be on the table for discussion. The two nations have also agreed to, have a resilient supply chain in critical minerals and semiconductors. So I think we will see some of the discussions on that as well.
And another Trump administration official that could be visiting India is Elon Musk, but he would be dealing with other issues related to his own business. What are we expecting?
So yes, Modi and Musk spoke last week and they discussed technology, of course. Musk in return tweeted that he would be visiting India sometime soon. Of course, there is no date yet, but this has again raised hope among officials in New Delhi that maybe we would see Tesla entering the Indian market. Now, that is one of the long pending a long pending demand of Musk. It has sought India to lower tariffs on electric vehicles. It's auto segment, something which India has chosen not to do specifically for one company. So I think we can see more progress on that front. Musk Starlink has already entered into a partnership with two of India's leading businesses. So that also gives hope that some of the hurdles which Starlink has faced may be, reconsidered by the Indian officials.
Bloomberg's Shruti Srivastava, good to have you with us on that expected visit from Trump administration officials to India. Take a look at how the markets there are getting underway, because we continue to see that rally that have propelled Indian stocks to the highest level since January. And you can see the broad upside as we continue to digest every little bit of tariff news that we're getting, with J.D. Vance also visiting India this week. But it's been really about the optimism, about the muted impact of tariff-related volatility on the Indian markets that have propelled these stocks higher. And you're taking a look at these Indian banks also. With ICICI, for example, the second largest private lender there, beating analyst expectations. Same for HDFC. We continue to see some of these bank names trading at record highs, rising optimism again that agreements will be reached with the U.S. on those higher tariffs, but also just potentially a more optimistic outlook on the broader Indian economy as well. Joining us now is Shweta Rajani, head of mutual funds at Anand Rathi Wealth. Shweta, really good to have you with us. Do you buy into this optimism about the Indian markets?
Hello, good morning. Absolutely. If you see, this is clear-cut, a very good time to be in the Indian market. And the optimism that you're seeing right now is clearly because India is likely to be fairly resilient from this entire, tariff war situation and the global uncertainty which is there. The Indian outlook itself, the fundamentals are going pretty strong at this point of time. And that's what we've seen in the earnings season as well. That so far, it's almost 30% of the index which is declared results. But within that, banking and financial services have been most of the companies that have declared results there. And it's all been double-digit growth. So I think that's bringing back. We're also seeing, if I have to say just a green shoot, but the last 2-3 days, FI has been net buyers in Indian equities. So yeah, fundamentals being strong, sentiments turning positive, earnings coming in, very much positive. Is all leading to this optimism that you're seeing. And in my view, this is likely to continue over the medium term.
President Trump, though, has also threatened potential tariffs on the pharmaceutical sector. Of course, we know that drug makers are big across the Indian market. Is this a concern in perhaps some sectors of the Indian market that could get hit?
Absolutely. There would be certain sectors where, there could be a tariff hit, and therefore there could be, certain issues coming in there, earnings, taking a drag in those sectors, be it, pharma is, you said one, IT not directly hit, but then because of, lower cost, it could have an ancillary downside impact to it. Auto ancillaries could be another one. So yes, there would be a few sectors which would be negatively impacted. But a lot of your domestic-oriented sectors, could also benefit because we are expecting consumption to go up. Banking and financial services would be another one to be fairly resilient. Private capex is supposed to, there is an expectation that we could see some pick up in that space. So sectors related to that, call it, building materials, cement, all of that could be on the positive side. So if you see, there would be a mixed bag. But when I'm looking at Nifty, the weightage of the domestic-oriented sectors would be far more. And therefore, from an overall market perspective, we could see, markets to be on the positive side, and earnings growth of, maybe a 10-12% over the financial year 26 looks like a possibility.
More upside if we continue to see easing coming from the central bank?
Absolutely. That would be. And, we've already seen a 50 bips of rate cut right now. The expectation on rainfall is that monsoon could be normal. We are already seeing inflation softening, so inflation is not so much of a worry. At the same point of time, government is focused on boosting growth. So all this means that softening of rate cuts in India are very much a possibility. I think the bond yields have also reflected that another 50 bips of rate cut seems like priced in. That should come in. And if that actually happens, we could see sentiments turning positive. Sentiments have already turned positive, continuing to be positive, and it positively impacting the equity markets.
Results from banks have been pretty positive so far, but what happens if the central bank continues to cut rates?
So, like I said, from a bank treasury standpoint, some bit of this is already priced in the profits. Softening of the rates would work. I would say overall, if I look at the bigger picture, yes, we are also expecting the credit growth to pick up. The asset quality of the banks, we've seen a slight improvement over there. I'd say, stable to slight improvement across banks. So overall, it should be positive for the overall banking and financial services, whether it's banks, NBFCs. Yes, that's one positive sector.
Just a couple of years ago, Shweta, the exuberance over the Indian equity markets was really capped by the fact that Indian stocks were pretty expensive. What are valuations looking like today?
So, if we see from a 26,200 peak that we've seen in September to now, where we are touching 24,000 levels, it's a 8-9% odd correction that we are sitting on. This is brought the valuations to what I would call as a fair value zone. If I'm looking at forward P, we are sitting at around 18.5, 19 forward P, which is very closer to the 15-year long-term average. If I'm looking at the trailing P, the trailing also at 21.5 is pretty much closer to the long-term averages. And given that you're expecting earnings growth to be slightly above your average long-term averages at 12%, I think this is clearly the fair value. Good time to enter into equity. Anybody, looking at building their equity positions right now.
When it comes to the strength and outperformance of the rupee that we've seen recently, will that have implications for exporters that need to do business overseas?
So in the short term, I would say, yes, that could be an implication. We could see increased volatility in the way the rupee is behaving against the dollar. But if I look at the fundamentals about, how the economy is doing and how resilient, India could be to the tariff increases, and how, possibly we could see some positive news on the bilateral trade over a medium-term perspective. And when I'm saying medium-term, I'm saying over the next, let's say, 2-3 year kind of a horizon, we could see, the rupee depreciation to be around that 1.5-2% range, which would be very close to what we've seen in the long term. So the long-term depreciation of rupee against dollar has been around 3.5% in that range. Going forward, we could see it somewhere around 2% to 2% in that range. So
right.
I think from a medium-term perspective, not so much of a concern there.
Shweta, Rajani, really good to have you with us, head of mutual funds at Anand Rathi Wealth. As we continue to watch, of course, the rupee and other currencies across Asia, we are seeing really U.S. dollar weakness being felt across the board, with the Japanese yen now at the strongest levels since September of last year, and this as the offshore yuan is also gaining to that 728 level, the Korean won at 1416 at the moment. Before we go, here's a look at tomorrow's show. We'll speak exclusively with the CEO of Mandarin Oriental Group about his outlook for luxury travel. That's as trade tensions dampen hopes for the sector's recovery. Plus, fresh market analysis with Laffer Tangler Investments amid rising tariff anxiety among traders. That's it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.